What's up, guys? Oh, decided to do a video tonight. Go through some trading psychology or something. Maybe I'm not exactly sure. Um, Part of why I started this channel was just to go through the ups and downs of trading and just kind of what it can mean to be a trader and like some of the problems that come along with that and some of the psychology that goes along with that. So I don't know exactly if this video is going to be a long video or a short video or whatever, but if you guys just want to hang out with me, it's kind of why I started this channel, was just to document some of my trading journey. And if you guys just want to hang out with me and be part of that, that's great. But I think maybe today go over market structure, either that or I don't know, maybe go over how I passed one of my first prop firm challenges ever, kind of some of the breakthroughs I had there or something maybe. Um, yeah, maybe let's do that. Here, let's go over that. This one's really easy. If any of you guys are looking to pass prop firm challenges, anything like that, it can be pretty difficult, especially if you're new. The first prop firm I ever passed and got paid out with, I'll show you guys exactly what I did and how I got a payout. It's really, really simple strategy, and I back tested this for about a year before I did it, and it does work. It's not super accurate, but when it works good. You're gonna go through some ups and downs. So you need to keep your size small, but it does work. All right, so it's first thing you're gonna do is just put your let's see. So this is just a random day too. I just randomly clicked this day, but you're gonna put your time frame to 5 minute. You don't need any other charts or anything like that. And I used to call this the golfer strategy, or the engulfing strategy. And it was a 5 minute strategy. You needed to place your trade between 9:30 and 9:59 a.m. only. You couldn't trade past that. And it was simple. You actually have a golfer right here. So right at 9:30, right at the open, this 5 minute. So actually, this is the 9:35 to 9:40 candle. It looks like you have a fully engulfing candle on the 5 minute, which is what I call this. So if you look right here, this green candle right here. What I mean by golfing, a lot of people kind of count golfers or engulfing candles a little bit different than I do. If I'm going to take a golfer, I'm going to take a fully engulfing candle, which means it needs to engulf the wick and the body of the last candle and close above it. So this candle right here is a fully engulfing long candle. So it engulfs the bottom. If this had a wick, it would have engulfed the wick, and it closes above the highest point of this red candle. This green candle does. And then my strategy was simply this. You go from the body to the wick, 2 to 1. So there's your target. You take this, this one fails, but you take this and you click that as soon as you get the first engulfing candle. Your stop is the bottom of the wick, and your target's 2 to 1, 2 to 1 R&R on it. And yeah, there you go. This strategy does work, believe it or not. It's not super accurate. I think it's like 54% accurate, but it pays 2 to 1. So I back tested this for about a year, I think, before I took it, and it actually passed my first prop firm a long time ago and got me payouts on it, or a payout. I think I took one payout on it, but so yeah, there you go. I've evolved a lot since then. I was kind of a newer trader back then and whatnot as well, but things have changed a little bit. So that's my engulfing strategy. It's kind of crazy to look at this, but yeah, again, just to go over the rules. So you need to take a trade before 9:59 a.m. Can't take a trade past that. and it's just 2 to 1. And as soon as it engulfs, you on this one you would have gone long 2 to 1. You set your target up here, set your stop right here at the bottom of the wick, and you just let it do its thing. If another candle engulfs or if another candle does anything, you don't take it. You only take the first one that happens, and there you go. So I actually got paid out from Top Step on that strategy a long time ago. Really simple. You don't need any other charts or anything like that. But part of that goes into kind of my whole thoughts of kind of how I trade or whatever, I guess. But which is I like simplicity, and I like my psychology to work for me. So a lot of people kind of trade in a way where they try to almost to make their strategy bend and their psychology bend to their strategy. So, and I think the longevity, like the traders that really make it a long time, everyone has a strategy, and honestly everyone has a strategy that works. You just didn't do it long enough. Like if you stick with your strategy long enough, eventually it's gonna work. Most people can't make that point because they get so discouraged and they just get so broken, because if you're on a 3 or 4 or 5 day losing streak that turns into a 2 week or a 3 week losing streak, and you're about to blow accounts and stuff like that, you start swinging for the fences. I mean, that's just human psychology. We're not robots. Like, we have emotions. And over the years, what I've seen traders come and go off YouTube, and myself as well, is, again, when I first started trading years ago, I mean, I had a strategy that I made that was very accurate, like 78% accuracy, 2 to 1, 2.2 to 1 R&R. But I was only trading like once or twice a month, and I was waiting for like this perfect setup, and then all of a sudden it would show up. And if I would take a loser, it's like, dude, I'm gonna have to wait 2 more weeks before I get another opportunity. Like, what? Like, and I would just start hunting for like any opportunity, and then I would take a bad trade and lose. So psychology and how you feel, and like, I don't think any other trader's probably going to tell you this, but I will. How you feel about your trading strategy is just as important as your strategy. I'm convinced in today's market that we live in a completely balanced market. And what does that mean? Again, I've run numbers on this stuff for almost a decade. What does it mean when we live in a balanced market? It means fair value gaps work, inverted fair value gaps work, trend lines work, channels work, wedges work. It all works. But it all works about 50% of the time. There's some strategies that are worse than others. Like if you're trying to catch a falling knife, that's not going to be a 50-50 strategy. It's going to be worse than that. It's not going to, the R&R is going to be terrible on it. Like, there's going to be some that don't. But the majority of strategies, no matter what it is, are going to work. And it's how you trade them is what makes them profitable or not. And again, I don't want somebody watching this to sit there and think like, oh, my strategy, like, it's just how I trade it. You might have a crazy, like, really bad strategy, so you might want to back test it for a couple years and see if it actually pays out. But if you have a strategy that you've back tested, the numbers are solid. What I've seen, I've back tested dozens of strategies for years, literally. And what I've seen is the good ones are about 68%. That's a really good strategy. Anything above 70 is excellent. Really, really good. A normal, regular strategy is about 60, 59, 60%. And kind of a bad strategy is right around that 50, 49, 50% accuracy mark. Now, if you cut your R&R down, then that's going to come down as well. So the less time you're holding your strategy, and the less, R&R you're trying to get out of it, that more accurate it's going to be. But if you're trading a strategy where you're trying to really kind of maximize accuracy R&R, that strategy just doesn't exist. There isn't a strategy, unfortunately. I've looked for it. There just isn't a strategy where it's 95% accurate at 3 to 1. It's just, it doesn't exist. So it's really how you trade. Um, and that's where trading becomes a skill game. And for me, my skills only go as far as my psychology and how I feel about it. So I've seen more traders fail because of their psychology, because of their brain and what goes on between their ears, than their strategy being bad. So again, my strategy, like this day, I just back tested this day just for fun. Let's go over some numbers. Anyone that's going to look at this is going to think this guy doesn't know what he's doing and he's a bad trader. Because I break the rules, because that helps my psychology. Is this even going to generate for me? I trade a lot. I have no problem taking 50 to 100 trades a day. That's totally fine with me. I don't see a problem with that. I mean, yeah, the commissions and stuff can be an issue, but I hate when NinjaTrader does this. Sometimes in playback, it doesn't let you. It doesn't let you see your numbers. Oh, it's because I'm clicking the wrong day. There we go. So on this, I got a profit factor of 1.5, so not great, but it's okay. Accuracy for this day was 62.83%. Again, not incredible, but it's okay. It's above 60%. I'm always looking for 65 to 68% is always where I want to be at. But I had $1,724 in profit. My commissions were a little high, for sure. I had $395 in commissions. But, if you take, take that times 5, it's a pretty good day for most people. But that's just my psychology. And I guess if I was to say anything, I'd encourage you new traders and stuff, or you maybe you're not a new trader, maybe you're somebody like me that is still grinding and going through the markets and after a decade, and kind of just learning to embrace and love the process that maybe that's where you are, and maybe you just need to be like, that's okay that's where I am, and maybe I need to quit listening to these gurus and some of these people that are promising all these things that are honestly just trying to sell you something, because I went through years of that. I went through years and years of people trying to sell me stuff, and honestly, they got me. A lot of them got me. I spent a lot of money. I mean, thousands of dollars on education courses and stuff that just weren't worth anything. And when trading really started to come around for me was when, and it never completely comes around for you. You're always learning, so I hate even saying that. But when it started to make a little bit more sense, or I had more peace about it, I guess I should say, was when I really started to say, okay, no one's smarter than me. There's hedge funds that spend millions and billions of dollars on this stuff who are like making like 10% a year, like, which is awful. Like, if I made 10% a year, I'd just give up. I'd be like, I'm just gonna go put it in the S&P 500 and walk away. Like, there's no point. So when I quit comparing myself, and I just started getting to the point where I was like, I'm going to listen to my own piece, and I'm going to listen to what I feel is correct for me. That's where things started to change. And again, I was profitable being extremely strict with my trading, and
Alpha Omega up MNQ on the 7. Alpha Omega down MNQ on the 7.
Miserable. I hated life.
Alpha Omega down MNQ on the 7. Alpha Omega up MNQ on the 7. Alpha Omega up MNQ on the 7.
Waiting all day
Alpha Omega down MNQ on the 7.
Dude, screw that.
Alpha Omega down MNQ on the 7.
Not worth it.
Alpha Omega down MNQ on the 7.
Let's see, what else should we talk about? Let's talk about market structure. Let's talk about what I think is the most important thing in trading. And again, this might not work for you, and that's fine, but this is what works for me. So I like Renko bricks. I'm a Renko brick guy because this, it's simple. It clarifies things. It gets rid of the manipulation. It gets rid of the BS, and it just is what it is, and I like that. I use market structure. So anyone who's might be super new, everywhere we see like an LH, that means a low or high, or an LL means low or low. HL means high or low. LH means low or high. BOS means break of structure. And market structure, I learned this from a guy named Bill Williams, who was a trader back in the day, who came up with, I don't know if he came up with it, but he spoke on a theory called chaos theory, which if you don't know about it, you can look it up and stuff. But it basically says that that chaos is a higher form of order, because chaos is actually what organizes chaos into structure. So chaos theory is basically a higher form of order. And what he found was that by studying rivers like the Missouri River and the Mississippi River, that they actually moved in fractals. And he found that when things would break fractals, that it actually meant something. And that's basically how I trade today. I look at this chart, and I see water when I look at this chart. I don't see price or money. I see a water, and I see a river. And I remember after I learned that, I got online and I started pulling up physical, like Google Earth images of rivers, and I started looking at them. And I started looking at them as a chart, and I was like, and I would scroll from the left to the right on these rivers, and I would say, okay, can I try and predict where this river is going to go if I scroll further to the right? And I actually started being able to predict. And rivers, what he found was, they ran a study at the University of Texas, or it might have been Texas A&M, I'm not sure. They spent millions of dollars on a study where they tested rivers in fractals, and a student came to the professor and said, hey, this is what's going on with this. Like, when these break, these fractal areas, this is what happens with the movement of the river. And they said, well, that's great, but how am I supposed to make any money with this study? And he said, I don't know, apply it to the markets. And they did. And what they found out was within 3 decimal places, the stock market and rivers move within the same fractional value, which is impossible. That's impossible. And I remember when I heard that, like, I thought about it for like 2 weeks, like literally, like, kept me up at night. I was like, that's not possible. Like, it broke my ADHD brain, and I figured out very quickly that it was true, and that the markets recognize fractal values, and when they break these structures, it really, really matters. So that's how I started trading. I filter from a fractal break as my direction. That's how I filter direction. It's like right here, you have a break of structure. We're short right here, so my bias is short until it breaks a long value from this point on. So my bias is short from right here until it breaks this fractal long. So now we're long. And when I trade Renkos, I trade Renko flippers. I mean, it's really that simple. Like right here, you would have had a flipper. You would have had a 3-pack right here. So 1, 2, 3 in a row, you would have had a 3-pack. Right now, you could be in another trade right here. You're still long. Speed this up a little bit. Still still long until it breaks below. Hang
Alpha
on
Omega
there.
up MNQ on the 7.
Stopped out there. Remember, we are still long because it has not broken a fractal. Oh, got me again. So we are still long.
Alpha Omega up MNQ on the 7. Alpha Omega up MNQ on the 7.
Be short. So I'm getting my butt whooped right now as it's coming down, but I'm waiting for that move up.
Alpha Omega up MNQ on the 7.
Might not happen.
Alpha Omega up MNQ on the 7.
Oh.
Alpha Omega up MNQ on the 7.
So we're still long because it didn't confirm below that fractal.
Alpha Omega down MNQ on the 7. Alpha Omega up MNQ on the 7.
Bottom, I don't think it's going to. We'll give it a
Alpha
shot.
Omega down MNQ on the 7.
No, no good.
Alpha Omega up MNQ on the 7.
Short,
Alpha Omega up MNQ on the 7.
$740 just off that one little move there. Not great.
Alpha Omega up MNQ on the 7. Alpha Omega up MNQ on the 7. Alpha Omega down MNQ on the 7. Alpha Omega up MNQ on the 7.
Get my first winner. Want to see this push break the ball?
Alpha Omega up MNQ on the 7. Alpha Omega up MNQ on the 7.
A little bit. Made a little
Alpha
bit
Omega
back
down
there.
MNQ on the 7.
166 now. I'm behind on this trade.
Alpha Omega down MNQ on the 7. Alpha Omega up MNQ on the 7.
Like to have seen that. Yeah, this needs to break right here, or else I need to get out.
Alpha Omega down MNQ on the 7.
Need to get out.
Alpha Omega up MNQ on the 7.
Immediately check marks back down.
Alpha Omega up MNQ on the 7.
Makes a little move. So went from red to green there. 15 minutes. I mean, after commissions, I'm down $19, but that's how I trade fractals, and that's actually not how I trade fractals. That's how I determine direction. This chart is actually how I would have traded that. Smaller time frame. So that was their 35 Renko brick. This is the 7 Renko brick. Is where I actually take my entries. And I would have been looking on that move down for these smaller break of structures. So that was about 931 to 946. So let's go ahead and trade that on this smaller time frame, how I actually would have traded it in real life. It's still going to get me there for a little bit. That move down. I'm going to put this over here. Wait, I don't want to do that.
Alpha Omega down MNQ on the 7.
I want to make it so you guys can see it, but all right, let's trade this. So we're at 931 here. Remember, this is our direction. So we are short here because it is breaking down. So it's broken a fractal low here. So we are short for right now.
Alpha Omega down MNQ on the 7.
So it is breaking high.
Alpha Omega down MNQ on the 7.
Nope, we got to get the chart fixed. There we go. So we're looking for break of structures long. Add delta and things like that. So this does get you for a while long. So there's an add because there's another break of structure on the way up. Might get me here. Yeah, don't like it. Is what it is. Oh, try to make a move there. Tried to re-break. And nothing to it.
Alpha Omega up MNQ on the 7.
Coming down. Got some delta coming in there. No break of structure on the 7. So this is where I'm gonna stop this for a second. This is where when I was trading this on the 35, I think it went down about 700. It saves you on these smaller time frames because it didn't break any of these lower highs to go to for an entry along. So it saves you money moving this to a smaller time frame a little bit.
Alpha Omega up MNQ on the 7. Alpha Omega up MNQ on the 7.
High, still coming down. Here, there, broke high. Oh, might give me a little bit. It actually did give me a little bit.
Alpha Omega up MNQ on the 7.
Still coming down.
Alpha Omega up MNQ on the 7.
And this is where it's about to break.
Alpha Omega up MNQ on the 7.
What you doing, buddy? The only reason I'm taking this, I know I lose on this. I'm just trying to keep myself honest so we have a comparison from the last one. I know this breaks short, but I want to take the loss so I have an idea of kind of where we were actually at. Daggum,
Alpha Omega down MNQ on the 7. Alpha Omega up MNQ on the 7.
Close. So we're down 144 compared to 700. That's pretty good.
Alpha Omega down MNQ on the 7.
Try it again. So we gotta take it, even though I know it loses.
Alpha Omega up MNQ on the 7.
Short. It broke that structure on the 35 short. So
Alpha Omega up MNQ on the 7.
See if this gives us any opportunities here. Needed to create structure here. So there's some structure. Looking for the break of structure. Gonna add if it does. Oh, might get me.
Alpha Omega up MNQ on the 7.
Break of structure. Want to see it re-break that structure. So adding.
Alpha Omega up MNQ on the 7.
Some off here.
Alpha Omega down MNQ on the 7. Alpha Omega up MNQ on the 7.
Oh, rebroke. This is kind of a difficult day. I don't really remember this day. So
Alpha Omega up MNQ on the 7.
Down 41.
Alpha Omega up MNQ on the 7.
77 after commissions, which isn't terrible. I mean, obviously you want to have a buffer, but
Alpha Omega down MNQ on the 7.
Oh, this is a risky one. It's real deep. I'm going to show you guys something real quick. So these moves here, where it comes down and kind of bounces back quickly and makes a deep kind of a V, these are risky. And you have to ask yourself, why is this risky? Like, what did somebody see here that would have made this risky? It's simply, what's the distance between my stop, which is here, and my entry, which is here? Well, it's bigger than a short one, like this lower high and this lower low. This is shorter than that. So that's it. I have higher risk here and actually win a little bit bigger than I should have. I'm in 5 contracts, 5 micros. And you know, it's too big for where I want to be at. So you know, just recognizing those small things as you get more and more experience as a trader is really, like I said, it's not your strategy, it's how you trade it. Those are the things.
Alpha Omega down MNQ on the 7.
And ooh, it's gonna get me.
Alpha Omega up MNQ on the 7.
It's gonna get me again. Breakthrough there. Come on. Rip down. Push. Just drop it. Just bring it. No, it's not. It's just unhappy in here. Take some of that off. Just. This is a tough
Alpha Omega down MNQ on the 7.
Very choppy and just not smooth.
Alpha Omega up MNQ on the 7.
Come on, push. I'll take that.
Alpha Omega up MNQ on the 7.
First time. Okay. So that's how I would have traded that. I think that was about the time frame. It was like 9:45 or something like that. So on the first time when I traded on this chart, I was down like 700. I think I only went down 200 or 300 here and then got back to break even. So that's how I trade structure. If I would advise any new trader, and again, I'm not telling you how to trade, you need to find out what works for you and really what you feel peace in trading. That's so important is being able to be confident in knowing this is the way that I trade it. And again, like I think in my previous video, I think I only made one other video, but I talked a little bit about card counting. I come from a card counting background, an advantage play background, and I don't do that anymore. So any of you casino execs or security, it doesn't matter if you see me because I don't do it anymore. But and it's not illegal anyway, just for everyone's just FYI. But I come from an AP background, and really what I learned in that is I want to generate EV every single day. I want to generate expected value every single day. And I kind of applied that to trading. And yeah, that's kind of how I learned how to trade, was with that kind of mentality and whatnot. So anyway, I don't really remember where I was going with that, but I got off work just not that long ago, so I'm a little bit tired. But let's see, is there anything else I want to go over? I want to keep babbling on about for you guys. If any of you guys have any questions or anything, again, the reason I started this channel was just kind of to process my journey as a trader and kind of invite you guys to go along with me. And if you guys have comments or questions, like, and show me your strategies. One of my favorite things to do is analyze strategy. I love that. It's like my favorite thing to do about trading is go over strategy, see where the edge is, see what the numbers are, like what the math actually says on it, and then develop how you're going to trade it from there. And again, that's where I was going with that, is how you trade is so important. And I could take this exact same day. I could come here and I could go, let's trade fair value gaps. So let's go to 1 minute. Let's put fair value gaps on it. Let's see. I'm gonna get through all this craziness that I've accrued over the years, all these different indicators and strategies. Put some fair value gaps on it. Like here, like you come and trade this day, and you can trade fair value gaps here, but how you trade it is what matters. So here, it opens at 9:30, immediately inverts his green fair value gaps and pushes away. Well, did you have a pullback entry? Well, no, you didn't. It simply put in these fair value. It didn't give you an entry. It didn't pull back to touch any of these fair value gaps. So, well, how do you trade that? Do you wait? Do you wait for it to pull back? Do you get a pullback here, but you're already extended off this one. This entry up top would have been a better entry, right? So how do you trade that? How you trade these strategies is really what matters. They all work. They're all good. It's just how you trade them is either what's going to make you profitable or not. And I can already tell you how I would trade this. I would look this and I'd be like, well, I wouldn't get this first one, right? So what I would do is I'd break it down to a smaller time frame. Like if I was going to trade fair value gaps, which I don't, but if I was going to, I'd break this down. I'd smooth it, so I'd probably use Heikin Ashis instead of regular candles. I'd go to a second chart. I'd probably put like 3 seconds, 1, and then I'd wait for displacement. If I'm going to trade a displacement strategy, I'm going to use a displacement indicator. That's just the way that would work. And then here, instead of waiting for pullbacks, I'd trade displacement. So let's see. So I'd put this is a lot of data. This might freeze my computer up a little bit, but Let's see. Bars specified. Bars to extend. We'll go 20 so that I can actually see it. So this would probably be how I would trade that. So let's just run through this real quick at high speed. I mean, we're just hanging out tonight anyway, right? Let's just see what this does. And I honestly, I love, like, this is my favorite part of trading, is analyzing strategy. Like, no risk, just in the simulator, just analyzing stuff. Like, if any of you guys know anybody out there that just needs somebody to analyze crap for them and tell them if it's worth a crap or not in the market, I'm your guy. Like, let me know. I will work for you. Put me on salary, bud, and pay for
Alpha Omega up MNQ on the 1.
Prop firm fees or something. I don't know. We can work something out though. I literally do this. I've done this for over 10,000 hours, and that's not an exaggeration. I actually literally have 10,000 hours of back testing just in the playback on NinjaTrader.
Alpha Omega up MNQ on the 1. Alpha Omega up MNQ on the 1. Alpha Omega down MNQ on the 1.
Alright, so here's the open. So we'd be waiting for a fair value gap to form on the 1 minute. Because that's what we're
Alpha Omega down MNQ on the 1.
Displacement now that we're doing fair value gaps. So we'd be waiting for a fair value gap to form or a fair value gap to invert. And then we'd filter it down to the 3 second. So we got a fair value gap right here. So we'd be looking for one long, which it doesn't give. It's about to invert. There's a long. And it gets you. So now it's inverting. So I'd be taking these short fair value gaps on the 3 second. Like that.
Alpha Omega up MNQ on the 1.
If it breaks that structure and pushes to the bottom, would probably be what I'd be looking for. It might get me. I'm going to take some off there. I don't know what that's going to do.
Alpha Omega up MNQ on the 1.
This actually isn't bad. This actually worked better than my other strategy. Alright, pushing down. There's some fair value up there, some displacement.
Alpha Omega up MNQ on the 1.
Immediately rips back up. A little loss there, not terrible though. No. We'd be needing more in fair value gaps short. We'd be looking for displacement like that. We got you. Looking for more. There's one. And a break of structure. Pushes. Getting out there. Looking for a fair value gap below this. I want to see a big push below this. It's not really working though. Yeah, I don't love it. Anyway, so we're back to 9.4. That actually worked a lot better than my strategy on this day. I still traded displacement. I still traded break of structure. I was just looking for displacement and then direction on the 1 minute for the fair value gaps. But yeah, up $635, $598. Not bad. So it's how you trade that. Now, if I would have gone in here and I would have said, hey, I need to trade this fair value gap, like if my psychology was like, okay, I'm going to wait for this 1 minute to invert, and it did. Okay, well, now I'll put in some short fair value gaps here on the 1 minute. Well, now I'm going to take those, but I got to wait for a pullback, and it's going to be a really hard life as a trader. Because you're going to be waiting for these pinpoint entries. And are they going to be accurate? Yeah, they're going to be decently accurate, but they're not going to be any more accurate. I can guarantee you that. If you wait for the pullback here, all the way up to this fair value gap, if you wait for this pullback, that's not going to be any more accurate than taking and being aggressive on the displacement down. It's not. Trust me. I've traded this stuff for years. It's not how it works. It's not any more or less accurate than any other strategy. It's how you trade it and how long you trade it for. That's what matters. And your bet structure. So as a trader, I only focus on the things that I control. What do I control? I control my entry, I control my exit, and I control my sizing. How many shares I take, where I take them, and where I get out. That's the only thing I take. And if you focus on those things, I'm pretty confident you can make almost any strategy work. I don't care what you're trading. As long as you focus on, can you do this repeated, like over and over and over? Like, are you getting enough opportunities to get your expected value on the table? And yeah, I mean, really, that's about it. Where you get in, where you get out, and your sizing. So anyway, I think that's enough rambling on for me tonight. I'm tired. So I hope you guys find some value in these videos and stuff. If you guys have any questions, definitely let me know. I mean, my goal is to make like one video a day or one video every other day. So I'm just gonna be uploading just stuff. If you guys just want to come along with me on this trading journey, just definitely let me know. And please, like I said, I love backtesting stuff. If you guys have a strategy you want me to backtest, or if you guys have ideas, even ideas on how to make my strategy better, please send them my way. I would love to put it down on paper. If I opened up my spreadsheets, oh my God, you guys would lose your minds. I have probably thousands of spreadsheets of data of me backtesting stuff, just tons and tons of numbers. What are you doing, buddy? What are you doing? My dog is itching. So definitely let me know your guys' ideas. I'd love to hear them. So appreciate you guys watching the video. If you guys have any questions, definitely let me know. If you guys want to subscribe or you guys find value in this, definitely go ahead and do so. But I appreciate you guys watching the video, and I'll catch you guys next time. Thanks a lot. I'll talk to you later.